Hello, good evening to you and a warm welcome to the holiday edition of Business Live. Coming up in this bulletin, we'll be assessing Parliament's role in checking budget overruns after the House approved 293 billion cedis in appropriation for government to spend this year. We'll be joined in the studio by the ranking member on Parliament's Committee on Economy and Development, Kojo Oppong Nkrumah. We'll also be doing some analysis on the Monetary Policy Committee's verdict on the economy after last week's meeting with him as well. Also in this bulletin, total value of mobile money transactions for the first 2 months of this year reaches a record level of 649 billion cedis. We have details of this and more lined up for you. Please stay. Pleasure you could join me. I am Pius Kojo Baka, grateful for joining me once again. Let's now dig in. Parliament has finally approved some 293 billion cedis for the government to spend this year. This was after Parliament passed the 2025 Appropriation Bill last Friday. But how do we ensure that the necessary checks are in place to prevent budget overruns? Kojo Oppong Nkrumah is the ranking member of Parliament's Committee on Economy and Development and also the Member of Parliament for Fuaseri. He joins me in studio for us to have this great conversation, and it promises to be exciting. Kojo, thanks so much for joining me.
Thank you very much, Kojo. How are you doing?
I'm doing great. Yourself?
I'm well.
Great. So let's start off this way. It's been a back-to-back holidays. How has it been for you?
Well, we had to spend a lot of time in Parliament, sometimes about 2 a.m., trying to get various estimates approved, getting the revenue bills passed, and then putting it all together to get the Appropriations Bill passed. We also had the Gold Board Bill to pass, and then in the short period, I had to spend time with constituents and then come back to Accra and try and tidy up work as we're going into recess.
I guess it's been a busy day for you throughout.
It's the nature of the job.
Great. So let's now dig in. Parliament's Finance Committee, and now we are hearing Committee of Economy and Development. What's the variation here?
So if you look at the old standing orders of Parliament, we had one committee called the Finance Committee. I had the privilege of serving on the Finance Committee in the 7th and the 8th Parliament. And that committee did everything to do with fiscal policy, monetary policy, and the economy itself generally. So fiscal policy is what the Finance Minister runs, revenue, financing, expenditure, which is not an end in itself. It's an instrument to help the economy or to affect the economy. And then you have what the governor does on the other side, monetary policy. And then you have what the other real sector ministers do, agri, industry, mining, etc., services, including telecoms. They are all economic ministries. And the policies and programs that they implement affect the economy. So between fiscal, real sector, monetary, and even the external, what happens on either your trade side or external economic development, they all come to have an impact on the economy. In the new standing orders, what Parliament did was to split the Finance Committee into 3 committees. Right. So now there's the old Finance Committee, which now focuses more on revenue measures and then on financing, the first 2 items of fiscal policy. And then you have the Budget Committee, which focuses on expenditure measures, so appropriation itself, and then the releases of the budget to be sure that they are not too low or they are not exceeding appropriation, and then the performance. And then you now have the Economic Committee, which measures how all of these things come to affect the economy, not just fiscal, not just monetary, but also more importantly, what the real sector ministries are doing and how it affects the economy as a whole. So that's why Parliament has split it into 3 different committees, and my committee is regulated by Order 230 of the new standing orders.
All right, so what does your committee basically seeks to achieve following the passage of the Appropriation Bill?
So the Budget Committee was responsible for ensuring that the Appropriation Bill was tidied up and reported to the floor, and then all of us helped to get it passed. And the Budget Committee will be responsible for ensuring that the releases are done in accordance with the estimates that were set out in the Appropriations Bill, not exceeding those amounts. In fact, if you want to spend in excess of that, you need to come back with a supplementary budget by the middle of the year. So they will be doing the, may I say, day-to-day monitoring of how the budget is being implemented. What our committee will be doing now is observing how all of that comes to affect the economy. So for the various measures in the economic policy document, we are looking at how it affects the economy and drawing government's attention to it. And one of the things that we've been drawing attention to is cost of living. That if you look at the economic policy measures that were rolled out, cost of living is going to go up and it's going to have a burden on the average Ghanaian. But for budget specifically, the Public Financial Management Act of 2016 spells out how you then go about accessing the funds and spending it. Broadly speaking, I'll say there are about 5 parts of our expenditure side of our budget.
All right.
You've got item 1, compensation for employees. So Controller and Accountant General will pay directly for those subvented agencies, except for agencies that are self-financing, agencies that are paying themselves. Then you've got goods and services budgets, which is what the ministries use to run the actual ministries, and particularly for the non-CAPEX government expenditure items. So for those ones, they will be released to the ministries on a quarterly basis. And the job of the Budget Committee is to ensure that those releases go through and that the chief directors, who are the spending officers, ensure that they are applied to the purposes for which they have been released. We will be looking at how those purposes impact the economy. So, for example, if there's a goods and service budget item like 200 million Ghana cedis for sanitary pads, Budget Committee will be making sure that it is released, and the ministry responsible for paying for it will have to do so. We, on the economy side, will be checking, has this 200 million Ghana cedis come into the Ghanaian economy, or did they end up going to China to import sanitary pads? All right. And how can the Ghanaian economy benefit from this fiscal injection of 200 million? So we'll be looking at it from that point of view. Then you've got something like debt servicing. So we've gone through a debt exchange program. The debt servicing requirements are a bit lower in the short term, but a bit larger in the medium term. Those ones will be done directly from finance. It won't come to any ministry. But again, Budget Committee will be looking at that. But then you have the almighty capital expenditure, CAPEX, where you have to go through some rigorous steps to be able to access CAPEX and pay your contractors doing various things. This government says it's doing a big push, and so has consolidated their CAPEX budget. Unfortunately, they have not been able to fund it like how they even said they will be doing it. So again, budget will be observing, we will be looking at its impact on the economy, because when you look at the 20 subsectors of the Ghanaian economy, there's something like construction. So if the CAPEX budget is released and it actually goes to pay contractors, we should be seeing an uptick in the construction subsector, creating more jobs and income in addition to increased productivity. So that's how we'll be monitoring.
All right, so Kojo, I want you to connect this for me. When you talk about your committee and that of the Budgets Committee, how do you ensure that both committees work hand in hand to ensure that we don't record budget overruns like we previously had?
So the budget overruns can only happen when ministries, departments, and agencies are contracting higher than what has been approved. You will find that before ministries, departments, and agencies issue contracts, they have to apply to finance for what we call a commencement certificate. If the guys at finance are doing a very tidy job, then a commencement certificate will not be issued for anything beyond what has already been programmed in the budget. And the job of the Budget Committee is to keep an eye, for example, on all of these commitments to be sure that no commencement certificates are being issued beyond what has been programmed in the budget. They are also supposed to ensure, for example, that the goods and services budgets that are released to the ministries are applied to the arrears that have been programmed into the gift miss. Because if they don't and they pay for something else, then those ones will pile up as extra arrears. And you will end up having overruns on a commitment basis. So the job of the Budget Committee, and we will be assisting them from the economy side, is to ensure that all of these things are adhered to so that you don't have overruns in the end. There's quite elaborate provision in the Public Financial Management Act. We haven't been too excellent in applying or enforcing it. But I think what we need to do now with these new standing orders and multiple committees keeping an eye on it is to ensure that those who are responsible for the application of these funds stick with the PFMA regulations.
How do you ensure that?
So, for example, on the Economic Committee side, we will soon start our public hearings, inviting the ministers to come and present what we call their annual performance reports. In those annual performance reports, we will spot any overruns that occurred in the previous years. We will also see your program of activity and your KPIs for this year and how you are spending this year. And if there are any overruns that are showing up, we'll be able to catch them in time and draw your attention to so that we avoid those overruns. The public hearings are very helpful in this area.
And when do you intend doing that?
The moment Parliament comes back, we are expecting that the 2024 APRs will be presented by the NDPC at the end of June. I expect that from July, we will start our public hearings at the Economic Committee, but we'll be focusing on the economic ministries, the economic sector ministries, to check their performance for previous year, program, KPIs, and expenditure for this year.
Kojo, ultimately, you want to ensure fiscal prudence and discipline. Can you guarantee us we can achieve that?
Guarantees are difficult to put up, but we have to put in a lot of effort to ensure that the checks and balances that have been introduced in Parliament now will help arrest these overruns in the shortest possible time or as early as possible, so that you don't only wait to find out the following year that whether on a cash or a commitment basis you have exceeded your budget. Another thing also is to keep an eye on expenditure and match it with incomes, so that even if you have programmed to spend 200 million for sanitary pads, and you have done that against an expected revenue flow, if that revenue flow is not coming, you have to, as a prudent fiscal policy manager, cut down on those expenses and not expend the full 200 million. Because if you do, your deficit will be larger at the end of the period because revenues didn't perform. But it's the real-time monitoring that will help us arrest some of these things before they get out of hand.
Let's talk about the good board. And it seems your side have a lot of issues with it. And I've heard your former leader, for example, making the point that there is a need for us to put in, experts, so to speak, in place to ensure that we see the effectiveness of that institution. What exactly are your concerns?
On the floor of Parliament, Dr. Amin, myself, many others who were asked to speak for our side, raised the argument that first we thought that the legislative process was being rushed. This was brought under a certificate of urgency, all passed in one night. Admittedly, we had spent about 4 to 5 hours earlier at winnowing committee trying to tidy it up. But we were still of the view and still hold the view that looking at the nature of the asset we are dealing with and how much impact it has on the Ghanaian economy, we should have had some more time to do some more consultation. The government did some good consultation, no doubt, but it would have been important for Parliament to also satisfy itself by engaging with various other actors in the economy to tidy up what was brought. That was the first challenge. The second challenge is that if you look at what they have brought, I know they dispute it, but they have created a vehicle that is both a regulator and an operator at a time when we are moving away from this commingled functions. You want a regulator separately from an operator so that the regulator can check the operator and other operators in the market. In their defense, they say that this regulator only regulates companies that it has given licenses to under it. But for us, we are clear that the moment you begin commingling the functions of regulator and operator, regulator who even has a tribunal within it to punish, etc., you are getting into very dangerous territory. There are other things in the bill which we only had opportunity to move amendments to. So, for example, we moved amendments to create guidelines on pricing, guidelines on the utilization of their profits, but some of the other risks you could not address even with guidelines. For example, the risk of inflation. They are looking to attract about $250 million a week to the central bank, and for the central bank to provide CDs for small-scale miners to provide the gold. The challenge with that is that we already have a framework for currency in circulation. Can we say for a fact that $250 million CD equivalent being injected into the economy will not go outside the framework of the currency in circulation and translate into heightened inflation? Remember, the IMF warned that even the gold for oil program, which followed similar lines, people bring in forex, you purchase gold with CDs, had the risk of injecting too much CD into the Ghanaian economy beyond the framework of currency in circulation. And so they asked that the central bank should stay out of it. We are worried that this could end up translating into a lot more inflationary pressures than we're seeing now. And then you have the almighty traceability challenges. We already have a problem with galamsey. If you don't have very clear traceability prescriptions in this piece of legislation, we fear that it may go to actually fund illegal small-scale mining and compound the problem. The problem exists when we don't have $250 million incentive for them. Now that you have $250 million a week as incentive and you haven't been able to arrest the problem, if you don't have traceability element in the legislation, it could get out of hand. We managed to introduce some elements to help, de-risk it. But there are still a lot more challenges down the line, and we think that some more engagement is necessary to tidy up those challenges going forward.
Is this something your committee will look forward into?
Oh, yes. We will be engaging with the Gold Board itself, the finance minister who is now in charge of the Gold Board. Remember, PMMC was under the lands minister. Now the Gold Board is under the finance minister. We'll be looking to engage with them some more. We'll be doing some quarterly tracking and public hearings with them to understand how these risks that we have forewarned are being mitigated.
All right, let's go to the central bank, Kojo. Last Friday, the committee of the MPC, increased the policy rate by 100 basis points.
Yeah.
Justification being geopolitical tension and, of course, continuing inflation, etc. Your thoughts?
Our prediction ahead of that was that they'll probably maintain the rate at 27. Because at a time when the government claims, and I'm using the word claims, the government claims that it is bringing down rates generally, we thought it would be incoherent with the government policy being run from the fiscal side by the finance minister for the central bank to jack up rates, despite, obviously, the inflationary pressures all around. And so it was interesting to see that the central bank was jacking up rates by 100 basis points, not even 50, by 100 basis points, and forewarning that if they have a view that the inflationary pressures are getting worse, they wouldn't hesitate to, adjust it accordingly. I think it exposes the incoherence in economic policy.
How?
The finance ministry, in one breath, is artificially pushing down rates. Inflation is still at 23%. The finance ministry has whipped down rates from 27 down to about 17, 19, depending on which instrument you are buying, because they are controlling both price and quantity of the bills that they are selling on the short end of the market. And we've been drawing attention to the fact that this is artificial, and you're going to force people to go onto the forex trading markets because obviously there's a negative return between inflation and what you are forcing them to buy. Interestingly, the governor also warned the finance ministry of the same thing. Now, in the last two auctions of T-bills, you have seen a massive undersubscription, and they've stopped publishing the stories that they have rejected money. And that's why we say that you can't do too much propaganda with the numbers. The reality now is that the central bank has come back onto the market and is jacking up the rates to be able to, suck up the excess liquidity.
Yeah.
They are also going further to introduce, I think if I saw it properly, a 256-day instrument beyond the 57-day one, because they see that what the finance ministry is doing is artificial and is leaving a lot of money on the market, and they have to find other instruments to mobilize those resources from the market. Now, when you have economic policy of this nature where there's a sharp dichotomy between what the finance ministry is doing and what the Bank of Ghana is doing, it tells you clearly that there's so much incoherence between the two policies. And if you go back to our budget debate, this is what we kept warning about, that there's so much incoherence and they need to find some more coherence between the policies they want to roll out.
So moving forward, of what impact will this coherence or incoherence you're mentioning have on the economy largely from where you sit?
If the investor is of the view that the central bank instruments can give him returns higher than inflation, he will switch to that, and the government will begin to find some more liquidity problems on the short end of the market because they are using T-bills to manage liquidity. And if people begin to move, even if people don't move towards the forex side and they move towards the BOG's instruments, the government will begin to have liquidity challenges. If the investor is also of the view that the inflationary pressures are so high that even what the BOG is promising, they don't have much confidence in it, they will go towards the forex market, and that will begin to put pressure on the currency as well. And that is why it's important for the BOG and the finance ministry to get their act together and have a certain commonality of purpose. But for us, what is even more interesting is for a government that, when in opposition, argued that we shouldn't talk about external economic developments and that it was our mismanagement that had translated into inflation of about 54%. It is so interesting that their first MPC meeting, they are now all of a sudden beginning to warn that oh, look at the tariff wars that are happening between America, China, and Canada and Mexico. Oh, look at the challenges, on the Black Sea side, and this could translate into higher inflationary
Why is that not telling?
Pressures. It is telling, and it is telling that the things that they pretended they were not aware of when they were in opposition, now that they are in the Bank of Ghana and managing things, they have to admit it. They can't run away from those facts.
Kojo, as we wrap up the conversation, talk to us about your expectations as the visiting IMF team, come, to town this weekend to assess the progress of the program.
We are clear in our mind that we are on track on the program. This administration has tried to claim that they have found some 49 billion arrears, which they want to add to our commitments and therefore take us into negative primary balance. We think that the IMF should take a very close look at that. We know the program documents and the definitions of arrears as were agreed with the IMF, and we can't see how the IMF should agree to this 49 billion being added to commitments to take our primary balance into negative. Now, that will mean that we are on a good performance scale when it comes to the performance of the program and can continue with the program to its conclusion. The other thing also is that the governor warned about this. The structure of the Ghanaian economy needs to be attended to some more from the fiscal and real sector side. Inflation, for example, food inflation remains a real risk. If you are not addressing food supply and food prices from the fiscal and the real sector, the agri sector intervention point of view, then you leave the central bank with no option than to try and suck liquidity from the economy by jacking up rates to 29 or 30% next time because of the inflation targeting module. And so, as the governor said at the beginning of the MPC meeting, there are structural issues that this government has to go back to the drawing board to tackle. And if you don't attack those issues on the real sector side, the Bank of Ghana will punish everybody for you.
But all the same, the fund is trying to give us some waivers. Do you think we should go for it? And of course, looking at the targets we've not been able to achieve over the period, how would that, help in us basically, achieving or having the program being approved?
From my experience, the fund gives waivers when at the time of review, you may not be on a particular target, but they see the path that by the time they get to board, you will be at that target point. And if that is a consideration under which the fund wants to give some waivers for some specific items, that's not a bad idea at all. But as I mentioned, it's important that the truth about the Ghanaian economy, as borne out by the data from Statistical Service to BOG, is upheld in the interest of Ghana and not used for political purposes, because it will hurt us in the end if we do so.
All right. Finally, your projection for the economy going into, as of course the Appropriation Bill has been passed, and of course you are looking forward to having.
We did 5.7% growth last year. By our model, this year the Ghanaian economy could do up to about 8%. Unfortunately, what this government is doing is that they are pumping more money into social interventions than into productive activities. They are pumping more money into, for example, the Office of Government Machinery, into research and other things, than into productive activities. If you don't invest in productive activity, then the Ghana Statistical Service will tell you that you are going to do 4% growth. We think that the government still has time to channel more resources into industry, into agric, into digital services that will help grow the real sector, translate into jobs and incomes for people. Now, for example, one of their major economic programs, they proposed 3: Economic Transformation Agenda, Economic Recovery Program, 24-hour economy. The president said the finance minister will bring it. The finance minister said that Mr. Guzitano will bring it. Parliament has risen, gone on recess. It still hasn't come. That means that up until May, the policy underpinning, which will then translate into work for all of the ministries to operate a 24-hour economy, is not ready. We are afraid that by the end of the year, this major economic promise will not have been fulfilled. And then you have the Economic Transformation Agenda and the Economic Recovery Program, none of which has been brought to Parliament. So the government still has time. They should go back to the drawing board, tidy up these documents, and let it reflect in their interventions and their spending so that they can boost productivity and jobs for the Ghanaian economy.
Great, Kojo Oppong Nkrumah. I truly appreciate your time here in the studio with me.
Thank you, Kojo.
Always a delight to have you on. So you still watching Business Live, and Kojo Oppong Nkrumah has been my guest here on Business Live. It's been an extensive conversation, quite usual from your normal Business Live bulletin. But let's take this story quickly. Total value of mobile money transactions for the first 2 months of this year has reached record levels. Latest Bank of Ghana data puts the value at 649 billion cedis. George Yafe tells us more.
In the first 2 months of 2024, the total value of mobile money transactions stood at 394 billion Ghana cedis. However, ending February this year, that amount has jumped by more than 100% to 649 billion Ghana cedis. The growth is coming at a time that government is taking steps to totally scrap this e-levy. Last year, the total mobile money transactions crossed 3 trillion Ghana cedis, and there are some who are projecting that the decision to remove this levy could go a long way to encourage more persons to turn to this platform for payment for a lot of financial transactions that they undertake.
Vivo Energy has announced the appointment of Mr. Christian Lee as the Managing Director of Vivo Energy Ghana following the passing of former Managing Director Jean-Michel Alandis, a Mauritanian citizen. Christian brings nearly 30 years of experience in general management, business development and sales marketing in more than 20 African countries. Now, since 2022, he has been head of international business for Engen, where he has managed and supported Engen's international non-South Africa portfolio, including operations in DRC, Namibia, Botswana, Mauritius, and of course Lesotho. Prior to this, he served 4 years as managing director for Engen Namibia, where he was recognized among the 10 top executives for 3 consecutive years. Christian also previously held other leadership roles in South Africa, Mauritius, and the Republic of Congo. He spent around 8 years with Chevron before transitioning to Engen Mauritius in 2011. Expressing his gratitude for his appointment, Christian pledged to work with the team and other stakeholders, including industry players, to drive innovation and excellence in the downstream business. Thanks so much for being part of the holiday edition of Business Life. I am Pius Kojo Baka. We've got more stories for you when you log on to myjoyonline.com/business. Always a delight serving you.